worked before in the mafia. I was in the street. I was a criminal. I was one of these 5 families operating in New York, going after businesses and taking their money. But actually, because of this fight between the 5 families in New York, the police, they were able to go after us. And they arrested most of my family members. And I can't do anything. So what I decided to do, I decided maybe I need to change my suit. Maybe I need to actually take my black mafia suit to work in the corporate world. But I discovered that I need to change my dress. Usually when I operate as a mafia, I wear this nice hat and I'm wearing this black dress. But in the corporate world, I discovered that our techniques of killing, harassing, and going after the businesses are not effective. I need actually to change my dress and wear a white, clean shirt. And I need to wear a very nice tie, and I need to go to the businesses properly to show them that I am actually working on the clean side of business. But in reality, I discovered that most of these executives, they are working on the dirty side of business. They are sitting in a conference corporate room like this, and they are figuring out how they can commit the largest fraud happening in the world.
Today, I take this occasion to discuss with you the updated version and the refreshment version of the 3-line of defense, which was officially launched by Global Institute of Internal Auditors in last July. Before talking about the 3-line, how can help the organizations in preventing and detecting fraud, I think it's worth to mention about what do you mean by the updated version? What is the difference between the retired model and the current model? We will talk about the similarities between the two and the key differences or the changes that happen to have the current new model. All right, the agenda for today, we'll talk about the introduction about a new update 3-line models. We'll talk about the 6 principles, the key roles, relationship among core roles, and applying the model in preventing and detecting fraud. All right, just a quick introduction about the initiative that have been conducted by the Institute of Internal Auditors. Again, last July 2020, the IAA officially released the new model in order to make it more to overcome some criticism to the old one. Because some of the criticism, they said that the retired model, which is the 3-line of defense, it was too restrictive, too limited. It is more, you can shape it as a defensive actions, greater than more, or rather than a more active, proactive actions. So this way of the criticism that said about the old model. Also, they talking about that you are talking about the line, there is a blur between the roles of the internal audit and the second management, or the second line and first line. Also, you know that it lasts for 20 years, the retired model, and due to the changing expectation of the stakeholders of the company and the complexity of the operations of the company, they have decided to update it to cope with the new trend of the market. Another initiative of the Global Assembly of the IAA, they will issue in the future within the coming 2-3 years, supplementary papers to address the fraud and corruptions, public sectors, ARM, SMEs, sustainability and technology, because the current one, it's generic to be applied for all organizations. But in the coming 2 to 3 years, we will have some specific supplementary papers covering these topics. All right. Now I think all of us would like to know the difference between the retired model. Now we can label it as the retired. the three-line of defense model, and the current model, a three-line model. I think let's start with the similarities and we'll talk about the changes. The similarities, both models are consistent with the International Professional Practice Framework, which is the IPPF. Both of them apply to all organizations, whether profit, non-profit, public, private. Also, both models, they still keep talking about three parties, which is governing body, management, and internal audit. We are talking about still about the three parties involved in this governance model. Both of them, they are simple and they are supported by a simple graph, as we see. This is the similarity. Now we will talk about the differences because it's very important to all of us to be aware in presence of the regulator, in presence of the board of directors, your colleagues. The first thing that the word defense is no longer more, we have it in the name of the three-line model. The old name, three-line of defense model, now we are talking about a three-lines model without defense in order to avoid the criticism that you are talking about the model, it's only defensive. So actually, it's not defensive, it is defensive and proactive as well. In addition to that, we are not talking anymore about three lines, first line, second line, or third line. Now we are talking about roles. We have governing body role, we have management role, we have internal audit role. Okay. Also, we can see that the name of the governing body, when we see it from the first time in the retired model, it's related to the governing body board audit committee, full stop. Some of the people, they ask, where is the board of trustees when we are talking about the public sectors or some companies owned by the government or non-NGOs or non-profit organizations? To overcome this, we name it as in generic term, which is governing body. Governing body, maybe board of directors, audit committee, oversight committee, trustee, board of trustees, etc. Okay. Also, one of the difference that we see that the direction of the relationship between the first line, second line, and third line with the governing body, we see we can implicitly that it is in one direction, but in the ground, it is two directions, two communications, reporting, delegation, reporting, and delegations. But this one, in the new model, we can see this relationship between the second line and the internal audit with the governing body. We have interaction, ups and down between the accountability and reporting, delegation, direction, etc. Also, when we see the retired one, we see that the third line of defense, internal audit, we see it is implicitly, or you can see it's isolated, which is not true. There is an interaction between the internal audit and other control functions and management as well. That's why we strengthen this model by putting this a relationship, it's go and forth between the internal audit and management. It's very important to have this alignment, communication, coordination, and collaborations. We will talk a little bit more about this relationship. Also, we can see here external audit and regulator, and some of the literature review and academic, they consider it as fourth line of defense, which is not true. Some of the criticism to this model, retired one, they said that what about the other regulator, let's say, or other stakeholders like income and sales tax department, stock exchange, or stock commissions, or security commission, etc. We overcome this by label it as external assurance providers. It's generic terms, maybe external audit, maybe income and sales tax department, stock exchange, maybe security commission as well. It's generic. It's generic. In addition to that, it is principle based. It's clearly addressed 6 principles, address clearly define the role of the governing body in general, the management and internal audit. And maintaining the independence of internal audit doesn't imply it's isolated again. Okay, this is the summary of the similarities and differences between the retired model and the current model, three-line model. Again, this is the 6 principles. Governance, to promote the governance. We can see the governing body roles. We will talk a little more about specifically their role in preventing and detecting fraud, fighting fraud. We have clearly the role of the governing body, the role of the management with the first line, second line. First line, it's touched the operation directly. And the second line, we can see it as a supplement or complement control function to the first line. Let's say we have compliance department, maybe risk management, quality assurance, information security department. And this is the internal audit. Okay. Also, we see this principle stress on the creating and protecting value. Creating and protecting value. All right. Let's talk about the key rules. This is generic rules. It's not only for fraud, it's generic, but now we will customize, we'll apply to the role of the governing body, management, whether it's first line, second line, internal audit, and external assurance provider, especially how we can fight fraud. One of the questions that asked by our colleagues, who is responsible for the fraud? Who is responsible to detect fraud? Who is responsible to investigate the fraud, etc. Let's to customize like this, or to summarize it, that all of these stakeholders are responsible for dealing with the fraud risk. All of them are responsible for dealing for fraud risk. What type of dealing? This is the different. What is the different rule, the different expectations among all these lines? But let's start with the governing body. What we are expecting from the governing body, whether it's board of directors, audit committee, board of trustees, etc. What we are expecting from them in fighting fraud. I will mention some of them. I know that we have a lot of things that we can consider it, but we will mention some key issues that we have to consider it. First of all, we have, as Iyad in the introduction raised about, to create culture, to create fraud culture in the company, to have fraud policy, fraud risk policy, to have active member and committed board members. Because when I was working before as a consultant, when we review the board of directors minutes of meeting, and as you know, in the minutes of meeting, they mentioned who absents, who attend in persons or in call, etc. We find that one of the board member over 2 years, he didn't attend any meetings. We raise it in our report, and the board meeting, based on our recommendations in coordination with the audit committee, they decided to resign because no added value. It's very important to have active, committed board members. We are expecting to have board charter, and in the board charter, there is some elements addressing clearly the role of the board of directors in the fraud, in fighting fraud. It's not enough to have only papers, board of charter. We have also to learn beyond about the meeting agenda of the board. Is there any item listed in the meeting agenda addressing the fraud risk? Any report raised by the internal audit to the audit committee, and any recommendation raised by the audit committee to the board? Is there any issues discussed, or it is in the agenda itself? If it's in the agenda, we'll go to the minutes of meeting. Is there any action have been taken in, any decision taken by the board? Is there any action plan to monitor? Who is following up on this action, on action plan? This is a very important to consider it. Also, for the organization chart to be signed by the board of directors, they have to consider the proper structure for any organizations in order to maintain the segregation of duties and to minimize or to cut one leg of the audit triangle legs, which is the opportunity. Also, we are expecting also to have the discretionary authority limit also at company level to buy in by the board to sign off in order to assign the responsibility, accountability, and authority. This is what we call it integrity triangle. And one of our clients, when I was working before as a consultant, they have it in the place and they are monitoring from time to time. Okay, let's now start with the management, first line and the second line. What we are expecting from the management to fight fraud? Well, we are expecting to have at least fraud awareness training for all employees. Is there a fraud training for the newcomers to the companies as a refreshment for the existing employees? It's very important to consider whether we have fraud awareness training. Why it's important? Because if there is no awareness, how the employee knows that this is wrongdoing activity? How he would be aware what he has to do if he finds some suspicious transactions, to whom he has to report? To the legal, to the HR, to the internal audit department, to outsource. Maybe you can outsource this service to other company. But it's very important to have a clear fraud reporting mechanism and to be part of the training material to the new joiners and as a refreshment for the existing employees. Also, the management has to have the fraud risk assessment. Maybe some of our colleagues said that, how come the management, they are not aware about the fraud, how they are dealing with the fraud risk assessment? Most of the companies, they ask for a support or advice from the internal audit, especially when the internal audit department or the chief audit executive or some team members, they possess the necessary skills about the fraud. They can ask them to play as a facilitator role to have the fraud risk assessment, to identify your fraud risk assessment to avoid any future surprises. I identify my fraud risk. Now we have to respond to this fraud risk by putting on the ground fraud controls, to have fraud controls in place. Okay, and this fraud controls in place should be reviewed by internal auditors. Now we'll talk about the role of internal audit to evaluate the effectiveness and the control design of the fraud risk controls in place. Also, there is an important role played by the HR, because we are human and we are part of these organizations, especially in the, let's say, in the hiring stage or onboard staging for the newcomers to the companies. It's very important to be before hiring an employee, because he will fit. We are not aware about his culture or his values, let's say. Is he fitting to our culture? How would, we have to do background check, let's say reference check, verification, education verification check, criminal check, for example, reference check, etc. It's very important what we call it, know your employee. As you know that in the screening stage, especially for the financial institutions, what we call it KYC, know your customers. Now it's worth to know your employee. This is part of the know your employee. So what about the internal audit? What we are expecting from the internal audit? The internal audit is responsible to detect the fraud, to prevent the fraud. No. He is responsible for identify the fraud red flags, to evaluate the effectiveness and the control design of the fraud controls in place. Also, the internal auditor has to evaluate for any suspicious transactions if we have the sufficient information or not in order to decide whether we need further information. Do we need to do more investigations or not? Is the internal auditor part of the investigation assignment? It depends on the internal audit charter. Some of the organization assign this responsibility to the internal auditor according to the internal audit charter, according to your qualifications, experience, skill set. You are responsible for any investigations. Other companies, they said, no, we are not expecting from you to detect or to prevent fraud, let's say, or to be part of the investigation, or you are not responsible, but at least we need your support help to identify, as we will use the internal audit as a source of information based on your experience of the company and history as well. Also, some of the standards in the IBBF, they address this clearly, especially in the proficiency. Not any internal auditor can do or can be, let's say, efficient in deducting red flag, fraud red flags. In order to be able to identify the fraud red flag and to identify the efficiency and the effectiveness of the fraud, you have to possess some skills. But this is what we call it a proficiency. Proficiency means that you have at least to possess some skills related to the fraud. Also, we are expecting from the internal audit to reflect in their engagement objectives. Some of the objectives are related to the fraud risk as well. Also, in the communications, we are expecting for any red flags, some report addressed to the management addressing this fraud red flags. Some of the organization, based on my experience, they separate the risk register into two parts. One related to the operation, financial, and others related to the fraud, to separate both of them. And they have different audit programs. And some companies, they have two different teams. If they want to spin off the team fraud from the internal audit, you might have internal audit team and you might have investigation team, different team, because you need to possess some, to have some special skills in conducting, especially that to conduct the investigations, because at any time we might expect to go to court. There is some attributes, especially surrounding the type of evidences to be submitted and to be accepted by the court. All right. Let's now talk. I would like to share with you what we are expecting from the external audit. Look, different rules. All of us, or all of these stakeholders dealing with fraud risk, but with different rules. External auditors, when we go back and see the international standards in auditing, especially 240, which is related to the auditor responsibility relating to a fraud in audit of financial statements. Is the external auditor responsible to prevent and detect fraud? This is actually the expectation gap between the owners of the company, the board of the company, what they are expecting from the external auditor. Because any incident happen in the company, where is the external auditors? Where is the internal auditors? Why they didn't detect this before, etc. But before assign a responsibility, we have to see their scope and their due professional care. We have due professional care for the internal audit and the external assurance as well, and the external auditors. Now we will talk about the external auditor, one of the external assurance providers. Okay, we can see the due professional care to see the working paper, if they put the plan properly, if they address they select the sample properly, the working paper according to the standards, maintain the sufficient relevant evidence, etc. Because when I was working consultant, we have reviewed many files according to the good industry practices in order to decide whether the due professional care was considered in the work or not. In this standard, they said that as external auditor, your responsibility to consider, not to detect or to prevent, to consider the risk, the fraud risk. Not all fraud risk, especially the material one. You know that the external auditors, they are focusing on the materiality. Again, they have to consider the fraud, consider the material fraud risk. When? We have two stages. If the external auditor dealing with the new potential customers, as you know that there is some client acceptance procedures and some questions in the client acceptance procedures, they ask you to do some background check about the company, some background check about the directors, the top management. And we did before, when I was working before, we asked for the board of directors name, the top management names, the company names, etc. And we are screening against maybe, let's say, in the word check or according to OFAC sanctions or UN sanctions, you can pick up maybe some positive match or negative match in order to see if if one of the member is involved in any criminal cases or it is sanctioned, blacklisted, let's say. And it happens before we proceeding with the engagement letter with the customers, we terminate the potential relationship with them due to this issue. Okay? So you can identify the fraud from the beginning before engaging with the customers. Or after engaging with the customers, you can monitor your ongoing relationship with your customers by reassessment. Maybe there is a new board member to the company. You have to do screening for the board members. Maybe a new major stakeholders in the company. You have to do your own screening as well. If I have to reassess, it happens before, especially with one of our clients, reassess and we upgrade the risk from low to high as a client acceptance. And we send officially the termination letter due to the justifications. All right. Because the objective of the external audit, as we know, that to provide a reasonable assurance about the financial statement, which are fairly presented according to GAAP or local GAAP or IFRS, and free from material misstatement. Look, he said that material misstatement. In order the external auditor to cover themselves under this standard, they have to do their homework by doing the client acceptance procedures, engagement acceptance procedures, doing some analytical procedures, especially with some balance sheet accounts and income statements accounts, especially with the special industry like banking, like exchange house, some high risk industry. We have to pay attention more, especially some based on the history and the fraud cases. Maybe most of these cases involved in this industry. In order to provide this opinion and they have some objectives of the auditors the external auditor to collect proper evidence to support his opinion. In addition to that, the external auditor ask from the management what we call it a representation letter. As you know that before issuing the internal audit, the external audit report, they ask management representation letter. What do you mean by management representation letter? This management representation letter, one of the statement, there is a confirmation, especially from the CEO and CFO. If there is no CFO, the person who is managing the finance operations of this company, confirmed that they are responsible for the design, implementation, and monitoring for the fraud risk. They will confirm they have adequate internal control. They confirm that they are not aware of any wrongdoing activities in the past. They will confirm a lot of confirmations will be used as a caveat for the external auditors. Now we will address the assurance provider. Let's talk about the regulator. This is at country level. At the country level, we can see it if we have code of conduct, for example. Is the Security Commission has code of conduct, or let's say governance code, let's say, for the all listed companies. Central banks, they have governance code for all operating banks under their supervision. Whether let's say the Ministry of Industry and Trade, they have some governance code for non-listed companies. What about the public sectors? Have they a governance code for the public sector or not? Also, we can address it, whether some actions or some activities maybe in X country considered as criminal, in other country maybe considered as civil. This is the stringent about why it is civil in X country, why it's a criminal. Also, when we go to the extreme, let's say to close to the criminal, we are expecting a repost disciplinary or disciplining or punishment action against this. Okay. We have to consider all of these issues. Also, some of the countries, they are establishing integrity or anti-corruption commission as well. This is also one of the signal how the country seriously take fighting the fraud at the country level, how the other regulators, whether it's private oversight or public oversight, how they are playing or how they, let's say, impose or enact the code of governance in this area. Okay. Before going to the next slide, just I would like to share with you, according to the ACFA report to the nations, one of their results shows that the internal audit is the second most common method of detecting fraud after tips, because the tips comes the first. Just the information, it's worth to mention it. Relationship among core roles, again, there is a communication between the governing body and management, whether first line or second line, between the management, first line and second line, and internal audit. And I noted some of the leading banks, especially here in Jordan, I noted there is what we call it some SLAs, surface level agreements between the internal audit and compliance, internal audit and the risk management. What the internal audit expecting from the compliance, what the internal audit expecting from the risk management, what the risk management expecting from the internal audit and compliance, what the compliance expecting from the risk management and internal audit. This SLAs, let's say, standardize or document the expectation rules, how many meetings should be conducted as needed or should be on a monthly basis to update each other. Internal audit can share their report with the compliance can share their compliance report with the internal audit. This is, it should be clear. Also between the internal audit and governing body should have clear communications. Among all roles, again, among all roles, all departments, whether it's first role, governing body, management and internal audit, they have worked together because their mission to deal with the fraud risk. How we can apply this model, three-line model in preventing and detecting fraud? Again, structure is very important to have it from the beginning. Reporting line, expectation, responsibility, to maintain independency, to have segregation of the duties, etc. Oversight and assurance, it's very important. I would like to take some time here to talk about what we call it assurance map. I have internal audit, I have compliance, I have risk management, I have Q&A, QA, quality assurance, I have information security team, I have finance control. What we are expecting from all of this, and I have external auditors as well. What we are expecting from all of this, because all of them, they might provide some level of assurance. In fighting fraud, we have to put in the ground what type of fraud risk that we have and what level of assurance I am expecting. Are we expecting to have high level of assurance in this risk from external compliance and risk management, or maybe I ask from outsource? Okay. Or this risk, I need medium assurance. I need internal audit and compliance to look in this area. I need it from compliance perspective and internal audit perspective. Or I need low assurance. No, I don't need the internal audit to be involved in this area. Just I can rely on compliance. But it's very important to have the overall assurance because we can benefit from the assurance map. We are not expecting to have unnecessary duplicates efforts, overlapping. We don't want to have some risks not monitored by each one. This is high risk. If no internal audit is not considering this fraud risk in their planning, their engagement objectives, their audit program, also the compliance not considering because he assuming it is a job of the internal audit. Internal audit is considering it's a job of the compliance. So that's why we have to have, it's a master sheet of the assurance, master sheet of the all fraud risk, and what we are expecting role of each level of the control functions or internal audit. Again and again, coordination and alignment among 3 lines, especially with the, let's say, the second role and third role. We are not talking about the lines now, between management, internal audit, management, internal audit with the governing body. It's very important to achieve the ultimate objective, which is to fight the fraud. Actually, this is the end of my presentation for today and the topic that I'd love to discuss it with you today. Thank you for your patience, for your listening, and we are ready for any insight you have, any Q&A. Thank you so much.
Thank you very much for the presentation. I think our audience, they are really enjoying the presentation. We are going to go into some questions, and after that, we are going to continue with some more concepts. So the first question we are getting, they are saying, based on the new line of the 3 lines model, how do you see that, the governing body, they are going to be aware of these changes based on their busy schedule? What is the best way for us to educate them about these new changes?
Perfect. Thank you so much for this question. Actually, I would like to share my experience here in Jordan regarding the IEA Jordan, what we have in our agenda and activities. We have been in touch with the Central Bank of Jordan and the Amman Stock Exchange and the Security Commission as well, to set a meeting with the decision makers, especially who is responsible for setting the laws and the regulations, in order to update them about this model, in order to reflect the new terms and the new model and their regulations. This is part of the initiatives and activities that we can do, and I encourage all of our colleagues, whether volunteers or board members of whether IEA or ISACA or any IMA chapter or ACFE chapter or any professional organization to promote this model to the regulators. And in addition to that, it's very important to the board and the audit committee members. Also, and it's easy to catch them through the listed companies. We can arrange a meeting with the audit committee and to educate them about this model. Especially now we have the tool Zoom or any communication tool. It's easy to deliver the message to them.
Thank you very much. And another question we are getting about the finance department. So the question saying the finance department, do we consider it the first line of or the second line?
Excellent. Regarding the finance department, we can't consider it first or second. It depends on the authority. They get it from the board. For example, if they are playing the finance control, because you know that the finance department, they cannot proceed with the payment, they cannot proceed with any actions without following any policies and procedures. So actually they are, you can consider it as a second line. But when we have the finance control, you can consider it like any other operations as a first line. But we don't want to make, let's say, a difference between first and second line, especially for the finance, but we have to see their role. Because both of them, whether first line or second line, it's related to the management. You are part of the management. So I hope you answered these questions, because I understand some of the company consider it a second or first. It depends on the authority they have. Maybe some authority delegated to the finance control or to the internal audit. It depends on the power they have.
Thank you very much. Another question, they are saying, where do you see the role of the chief audit executive? Are they responsible for fraud prevention inside the organization? And do they consider this conflict of interest if they handle internal audit and fraud prevention at the same time?
Okay, thank you. Regarding this, let's start with the chief audit executive. If he or she has the skill set, he's aware about the fraud, and he's capable, he can do it, but we have to refer to the audit charter. He has to raise it to the board that I have this skill set, I can take this responsibility, but please, I have to be mentioned in my audit charter to have this responsibility and power. But if you feel that most of your experience in the internal audit and you are not updated about the technology and the characteristics of the fraud, and I don't recommend to be involved, because you will not add value and may, let's say, impact your reputation in front of the board. You can outsource it.
Perfect. And they are speaking now about a very important concept. So the concept that are raised, and always the challenges between the English standard and the American standards. The English standard, which is based on UK, saying always that organizations, they have criminal liability for the act of their employees. So in that way, if employees are doing any activity without the knowledge of the management, the corporate is responsible, plus the senior executive and the board and the governing body is also personally liable for the act. So how do you see these changes? Because we are running in the world in two standards, where American, they are saying, you know, most likely the organization is responsible, and we need to do federal investigation to see if executives are responsible or not. But in most of the cases, if there is no wrongdoing clearly from the executive, they are just not doing proper supervision, they only hold the corporate liable. Compared in UK, if the board of directors, if the audit committee, if the senior management, they are not doing the proper oversight, they are personally responsible. So what do you think about that?
Yeah, this is similar to the one when we say that some activity considered as civil in some countries and criminal in other countries. Let's say similar to these cases, as you know, that we have to make evidence whether this employee has, whether he's doing this within his, let's say, his mandate, within his scope, within his authority or not. But I think it will be a big challenge for the international companies working. For example, you have subsidiary in US and you have subsidiary in UK, maybe in Europe, maybe in the Middle East. But I think we have consider it case by case. You have the fraud policy in general, but you can make an addendum, let's say the addendum to the fraud policy to reflect the current law and regulations of each country. So I think by doing this, you will have the fraud risk policy apply to all, and you will have the addendum which reflect the local law and regulations.
Perfect. Now let me tell you what I did. I decided to move, and I decided to change my black suit and work in the corporate office. I am working here in the corporate office. And let me tell you what I did. I actually decided to help some executive like Maxwell. Robert Maxwell, he was running his amazing global organization. And he was able to manipulate their books and record because I helped him. When he died, unfortunately, our fraud was uncovered. his assets were only 2 billion and his liability is 4 billion. Can you imagine? We were running the organization on 2 billion negative. And we were able to do this because of a very simple trick in the books that you just mentioned in your presentation, which is actually he was the CEO and he was the chairman. So as a CEO, he's saying everything is great. And as a chairman, he's telling the board, the CEO is doing great job. He is controlling everything in the proper way. So this is the issue with implementing these 3 lines of defense that I found that I don't like, because they created segregation. They made sure that the CEO is not actually the chairman. They don't have the ultimate power to control the organization. So what do you think about that?
Yeah, this is what we call it the duality. And most of the governance code, especially for the financial institution, address it clearly in their corporate governance to make a separation between the chairman and the chief executives. For example, I would like to share our experience here in Jordan. Most of our Jordanian banks, they are family business. And before having the recent code issued by the Central Bank of Jordan, the duality was acceptable, it was legal. There is no clear instructions to limit, to have this duality. After having this corporate governance code, they split between the management and the ownership, or the chairman and the chief executive. I would like to highlight on the family business. And to be honest with you, when the 3 line of defense, or let's say the 3 line models, when they issue it, I communicated the similar message to the person who's responsible in the IA. What about the family business? You know that the family business, they have unique situations. They have the family members managing. Come on, you cannot separate the founder from to be CEO and the chairman. This is my company. This is my money. This is my family members' money, etc. For my colleagues, if I'm working with the family business, I know that you might face some challenges in applying this model. And we have to be careful. We cannot apply everything in the governance code in your company. You have to be careful to customize in a way. You have to consider, what do you mean by the family constitutions? What do you mean by the family governance? If any family member has to be part of the company, is the financial manager should be part of the company? I would like to share with you some cases here in Jordan. One of the company owned by 2 families. They have decided every 2 years, make a rotation for the financial manager from X family, after 2 years, from Y family, after another 2 years, X family. You can imagine rotation every 2 years. They have decided to hire someone, non-Jordanian, Egyptian one, okay, just to manage this company in order to avoid this. So look for the governance, we have to consider the family businesses. Yes.
Thank you very much. And also, do you know, when I was working in this corporate office, I tried to keep my shirt clean, but unfortunately it's getting dirty over and over with all these fraud schemes that I was running. And when that I noticed, because I was here in the board office, I was running the governing office. If we can corrupt things, if we can manipulate the records, and we don't listen to auditors, we don't listen to the first, the second line and that we have, we can have a full control of the organization exactly like this. We're on monkey business.
Just like you might want to know, sales aren't up, they're down. Ooh.
So what happened to us when we are doing all these schemes? This is what happened to us. We actually faced so many scandals in corporate governance. It was a crisis because the culture at the tone at the top, they were completely disaster. And what is the end result? The end result that shareholders, they fired us. They say, you are fired. You are not gonna run my organization anymore. Because the way we have built the organization from the ground up, it was based on completely wrong concept. Let me tell you what I did. I made sure that, you know, most of the guys who are in my board of directors, they are executive management. Only limited number of independent directors that they have no knowledge and understanding of the process. And I made sure that the chairman is the same like the CEO, and I have actually hiring the external auditor by our executive team, so they can make sure they agree with our findings. I made sure that we determine the compensation of the board of directors, so no one will complain, and if they complain, we can fire them. I had a full control over the organization that I was running, and it was disaster. And this is where, after that, when the chairman and the executive directors and all these executives, they are doing massive fraud, and we got fired by our shareholders, they decided to implement effective corporate governance. They decided to hire independent board of directors, and now they are running the organization based on the right organizational governance. And this is where actually at that time I decided that maybe I should not continue in that organization and I should move somewhere else. So I decided to go and involve myself in other fraud schemes. But everywhere I go, I see governance is there to remove that fog, to make it clear for the organization that what they do actually is about having the proper strategic direction and implementing the right oversight inside the organization. So the organization will have a clear direction where they are heading, and they have the proper controls, the proper structure, the proper procedures. So in that way, they will be able to achieve their objectives. And what I discovered that this all started by making sure that the organization, they implemented the proper culture and they have the proper structure. So they started by having the proper structure, by having independent board of directors, by having different committees, different organ and different committee responsible for hiring the external auditor, like audit committee, a fraud committee for handling fraud investigations. They have a chairman and CEO. They are different than each other. They are independent, and we have a different committee from independent director nominating board of directors and determining their compensation. But that is not about it. They actually went and they fixed the culture. They ensured that the culture that we have inside our organization is actually based on integrity, not based on corruption. And that was the end for me. I couldn't continue. But what I noticed that there was a global trend of white-collar crimes happening, not only inside my organization, but globally. And based on the recent PwC report related to economic crimes, we can see exactly what's happening. The amount of fraud done by white-collar crimes is massive, is accounting for $42 billion of losses. And this fraud is not done only by us. I thought I'm the only one who's doing it. Then I discovered that actually this fraud is done by consumers, is done by cyber criminals, and also it's done by executives inside the organization. But for a long time, we have focused on building these, what we call them in the old days, defense lines, and now we call them 3 lines inside the organization. But what about the lines that we need to build outside the organization to ensure that consumers, that vendors, that hackers are not going to attack us? Because we can consider now these are the major risk. And this is where the risk is happening, not only inside the organization. Based on the survey, they showed you that 39% of the attack that's happening on the organization related to fraud is happening from outside the organization. It's done by the customers, by the hackers, by the suppliers. And we are trying to build our lines of defense or our lines model inside the organization, and we are forgetting that these guys are outside. So then I decided maybe I should leave the organization and I should work from outside attacking the organization, because this is where most of the fraud happening. Because today they have the proper controls, like you mentioned, and they have all these lines inside the organization, so fraud will be controlled and managed. And they say this fraud that's happening, 34% is happening by middle management, 31% by operational staff, but 26% still happening by actually the senior management inside the organization. And sometimes there is a collusion, 20% between internal and external. So we can see exactly what happened. They say about $100 million of losses happen from these guys inside the organization committing all this amount of fraud. These guys who are able to manipulate all this record and information. And we can see the guys who are inside, they are expert. They know exactly what's going on. Let's see this confession from one guy who did one of the biggest fraud and how he was able to master this and do it properly.
Nobody should be trusted. Trust is what you would call an exploitable weakness. Trust means is that you're giving somebody the benefit of the doubt.
Just, I want to make sure you are watching it perfectly. Okay.
And while you give somebody the benefit of the doubt, that's when white-collar criminals take advantage of you.
This is Sam Antar, who helped perpetrate one of the largest securities frauds of the 1980s, Crazy Eddie electronics stores. He avoided jail time by testifying against his cousin and boss, Eddie Antar, and other family members.
Securities fraud, tax fraud, money laundering, you name it, we did it. I've committed so many sins, you need 5 hours of tape to fill it up, and still wouldn't do it justice.
He now works as a speaker, traveling the country, talking to companies and universities about how to protect against fraud. His clients include the FBI and even some of those agents who helped prosecute the Crazy Eddie case.
For a period of time of about 15 years, Crazy Eddie was a private company. Now, as a private company, it doesn't pay to overstate your income. So what we used to do was we understated our income. We would not report the cash sales. Back in the 1980s, most customers paid in cash. So we would not report the cash sales, and two things would happen. Number one is our income taxes would go down because we were underreporting our taxable income. But number two, we were stealing the sales tax. Sales tax is a license to steal. The government trusts and then maybe look to verify later on. So between stealing the sales tax and evading the income tax, that was the Crazy Eddie economic model of success when we were a private company. Now, as a public company, it doesn't pay to steal sales taxes or evade income taxes because your company is valued at a multiple of earnings. So actually, you have to do the reverse. Instead of understating your income, you have to overstate your income and actually overpay your taxes. Because if your stock is trading at a multiple of earnings, the amount of money you overstate your taxes by is minimal compared to the amount of money you're going to be able to sell your stock for at an inflated value. How did I get caught? Well, conventional wisdom would be that the auditors came in, checked the books and records, and caught us. Auditors never had a clue. What happened was Victor Palmieri, who was one of the top respected hedge fund managers of his day, took over Crazy Eddie in a proxy battle. And within days of taking over the company, he takes an inventory and effectively he finds empty boxes. He discovers eventually within weeks after the inventory that we'd cumulatively overstated our income in the 3 years that we were a public company from 1984 to 1987 by about $80 million. He relied on the integrity of what we call audited financial statements. Because I believe the word audit is misleading. It creates an expectations gap between what auditors really do and between what investors expect them to do. It creates an expectations gap for investors. The reality is that audits are designed to catch material, non-intentional errors. Material, unintentional errors. The word unintentional is important. They're not designed to catch intentional errors caused by fraud.
It's interesting to see all these schemes that are happening. And let me tell you what happened to me. I actually was thinking that everything is okay in my life. Do you know what I was doing when I was working as an executive inside the organizations? I was actually donating money to the guys who are in prison. I was going on a weekly basis to the guys who are in prison and I'm donating money to them and I'm telling them everything is gonna be okay. You are gonna get out of prison and you are gonna go back and to the society. And do you know why I was doing that? Because I was afraid one day I would be with them with all this fraud that I was doing. And I want them to be nice to me the same way I'm nice to them when I am running all these fraud schemes. And this is what happened at the end. I ended here because the government, they are going over white collar crime. But is this reality? The government in 2002 to 2004, they were going after white collar crime. But it looks like not anymore. If you see the federal government actually criminal prosecution over the last couple of years from 2004 until 2020, the government is going less and less after white collar criminals, doing criminal prosecution against them. So at the end, they are not ending up in prison. Most of them, they are settling. Most of them, they are actually doing deals, and we are not taking cases against them. Why this is happening? That's the question that I want you to ask. I want you to find the answer for. It looks like the whole industry, the fraud is booming and is increasing day by day. And we are the guys who did the fraud in the old days before 2004. We are in prison and they took criminal action against us, but day after day, the less cases are taken against these guys. And the more cases are taken against guys who are doing fraud outside the organization, which is interesting. And why? This is the question that everyone should ask. Why, when we see guys like Goldman Sachs, they are doing a massive amount of fraud in Malaysia, where they are actually involved in it, and at the end, they are trying to find a way to pay penalty of 2 billion to settle the case. So are we going to take case against these individuals, or we are going to settle? Because if at the end of the day, these individuals, they know that there is nothing that's going to go against them, against these white collar crimes that they are doing, except actually being fined, it's all calculating the benefit and cost, because there is no criminal cases against them. And this is where we need to not only make sure inside our organization we have the proper lines, we need to make sure that the government and the regulators, they have the proper lines to catch these white collar criminals. Thank you very much for listening to this presentation. I would like to thank Mr. Ahmed for actually being our special guest speaker. And I would like to say congratulations, Mr. Ahmed. He just passed his CFE exam this month. So congratulations for becoming certified fraud examiner and for joining all our fraud fighters in actually preventing and detecting fraud and investigating white collar crimes. Any final comments you would like to share with us?
Thank you, Iyad, and thank you, everyone. Just it came to my mind to share with you some information regarding the role of the governing body and management and internal audit and regulator. There is specifically, for example, for the banks, they have some instructions that clearly mentioned what the duties of the compliance, what we are expecting from the internal audit, because it's highly regulated, the financial institutions. It is a role of the regulator itself to reflect the minimum requirements, because in addition to that, some banks make it more stringent, but at least they have to address the minimum requirement of the regulator about the duties and the responsibility of the board of directors or the governing body and management and the internal audit. For this, would like to share with you that there is some minimum requirement by the regulator. You can add to it, it's flexible, but at least you have to address the minimum. This is the final message for the time being I would like to share with our colleagues.